In today's session, I'm going to answer questions that were posted on my YouTube channel. So there were a few questions that came up, and I'm just going to make one YouTube video answering all these questions. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me directly, please go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now let's go through these questions one by one. The first question here says, what does the data show about Albany in Western Australia? So Albany is a port city which is 4,000 kilometers south of Perth. It does have a population of about 40,000 people and its GRP is 2.69 billion. Now before we analyze Albany, we want to make sure that it's not a volatile area. We want to make sure that it has the strength in its local economy and that the economy is diversified. So looking at this first chart, we can see that there are several industries powering that local economy. Healthcare and social assistance, is always good to see that these numbers sitting on top. So it is the biggest employer with 18% of the population being employed in healthcare and social assistance. And then we have education and training, public administration and safety, retail trade, construction, manufacturing, agriculture, forestry and fishing, and several more industries. So it's definitely diversified. There is clear evidence showing that it's not just reliant on one or two industries for jobs. Okay, looking at the unemployment rate, we see that the unemployment rate is sitting at 3.2%, and that's one of the lowest figures in the country. So there are a lot of jobs being created in this Albany region, which has resulted in this low unemployment rate. Now moving on to interstate migration trends, we see that Albany has recorded 465% increase between 23 and 24. That's a massive jump in the number of people moving into Albany. Now Albany does have a lifestyle element to it as well, and that's why on top of the affordability, on top of the jobs that's available there, people are moving into that region in big numbers. So that's always a very positive sign. Now let's look at some of these suburbs in this Albany region. You can see that most of the suburbs are around that 500 to 600 price points. There are a couple of suburbs where you could still buy something in the mid 400s, and you can see that all of them have recorded double-digit growth over the past year, positive growth. And if you look at the past 10-year growth, it hasn't really grown a lot. You're seeing 31%, 35%, 38%, 28%, and so on. So I would say Albany is somewhat like a Perth, but it's earlier in its growth cycle than Perth. So that's a positive sign for the Albany property market. Now let's look at some market pressure trends. The days on market here has been steadily reducing from 2020 from about 100 days to currently around 60 days. So the demand for property is certainly increasing. If you look on the stock on market, you can see that stock has rapidly declined from 2021 onwards. So there's definitely a lack of supply in the Albany property market. The next one is the vacancy rates, showing the rental demand, and you can see that the vacancy rate is around 0.2%, showing an absolute shortage of rental properties in the Albany property market. So the sales property market is really strong, rental property market is really strong. Albany has got a diversified economy. So for me, Albany is a go if you can buy in that 500 to 600 price point. Now let's move to the next question. Where do you get these data? Are they expensive? Now I get data from both paid and free resources. The free ones are mainly economy.id, REM Plan, SQM Research, Suburb Trends, And then the paid data is H tag, where I get market pressure data, where you can see these days on market, stock on market, things like that. So it's a mixture of both paid and free resources. The next one here says, would it be possible for you to do a video on how to work out the land value when calculating the land to asset ratio? Are there any free tools for this? Now, what is land to asset ratio? It's the value of the land divided by the total value of the asset expressed as a percentage. Now, typically you would want that land value to be at least 50% or higher, 60 or even 70. Now, in newer builds, you would see that most of the value is in the building. So these properties might have lower land to asset ratios. In older houses in established suburbs, you will see that the building has depreciated in value significantly and most of the value is in the land. So how do you find the land to asset ratio? There is one simple way of doing it. Just go to realestate.com.au, look at the recent land sales. For example, if a 300 meter square block sold for 300,000, then look at the property that you're interested in. Let's say that is a 500 meter square block. Then immediately you would know that its land value is sitting around that 500,000. And then you can work out the land to asset ratio. Sometimes there are not many land sales available. So the only other way you could do it is calling up experienced real estate agents in the area and ask them what price the land would sell for. And most likely you would get an answer, and you can use this to get an estimate for the land to asset ratio. Now, both of these are just estimates. It's not exact or actual figures, but these are probably the best ways of doing this. Now let's move on to the next question. Can you do 800,000? Now this was coming off the video where I did about Brisbane, Perth, Adelaide for 650,000. So I believe this person wants to look at that 800,000 price point. What can you buy for 800,000? So I wouldn't typically go all the way up to 800,000 because at higher price points, the rental yields are going to suffer. I would rather break that 800,000 into a 450,000 purchase and probably another purchase a few years down the line. But if it was just that 800,000 that you definitely wanted to spend, I would look to see if this is something where you wanted growth over the short term or if this is just more of a long-term game, right? If you wanted a short-term equity, then I would look into strong markets like Mackay in regional Queensland, where you can buy something for 700,000 and still get about 6% rental yield, or Bunbury in Western Australia, where you could buy something for 750,000 and still have that 5% rental yield. So you will get good growth, and at the same time the rental yields won't suffer as much there. The other option is that if you're not worried about short-term growth, you could get into markets like Newcastle in NSW or Geelong in Victoria. Now both these markets aren't moving up very fast. Geelong is definitely stagnating. Newcastle is just slowly moving up in value. So you wouldn't really have too much of short-term growth, but these markets would definitely perform well in the long run. So it definitely depends on what you want to achieve. Let's move on to the next question. This says, no Sydney, skip. So this is again related to that video on Brisbane, Perth and Adelaide. I believe they want some feedback around the Sydney property market. So let's talk about Sydney. Now, if you had 1 million budget, you wanted to buy a freestanding house, would it make sense or no? That's exactly what I want to cover here. So the first one is mapping the market from CoreLogic, and you can see that there are blue areas and then there are pink areas. The blue areas is where positive growth has been detected over the past 3 months. The pink areas is where negative growth has been recorded over the past 3 months. So you can see the pink areas are mainly the northwestern suburbs of Sydney, the inner west and the eastern suburbs, where house prices are expensive. The more affordable areas, at least from a Sydney perspective, like the western suburbs of Sydney, are still recording positive price growth. But I think it's just a matter of time before these suburbs eventually start to slow down and start stagnating to some extent as well. Now, looking at the October house price movement, you can see here Sydney has recorded minus 0.1 growth, and that's mainly coming from the more expensive suburbs which are dropping in value. The next one is the stock on market. So the blue one is the Sydney property market and the orange one is the Melbourne property market. So the total listings in Sydney have been increasing steadily from 22 onwards, and even if you look at the new listings, you can see that they have been going up from 2022 onwards. So listings are increasing and the supply of stock available on the market is also increasing. Now the next one is the housing affordability. You can see that housing affordability in Sydney is stretched and it's way above all the other capital cities. So Sydney is really at a peak as far as affordability is concerned. It's already had a lot of growth over the past 10 years. I wouldn't be surprised to see suburbs with 200% growth. So we're having a lot of growth in this market. Affordability is stretched, supply is increasing. I don't really expect to see really strong growth over the next 3 to 5 years. The growth will be slow and therefore I would not invest 1 million in Sydney at this point of time. Now let's move on to the next question. What markets do you consider to be worth entering now? Victoria, Regional Queensland, and then it says, do you think it's too late to enter Perth or Brisbane? Now let's look at the first two parts, Victoria and Regional Queensland. Now, Regional Queensland is a seller's market. Prices are rapidly moving up. It's a heated market, and Victoria is a market that's actually going down in value. Most of regional Victoria and Melbourne is going down in value. So it really depends on what you want to achieve. If you wanted equity within 1 or 2 years to buy other properties, then I wouldn't go into Victoria. I would go into Regional Queensland and buy a property there. But if I wasn't too concerned about getting equity in 1 or 2 years, I was okay to wait maybe 3 to 5 years to get some equity from that property, then I would go into Victoria, possibly Melbourne, where I can get properties around that 500 to 600 price point and buy them at a discount, be able to negotiate hard and buy them at a discount. So it really depends on what you want in the short term. The next part is, do you think it's too late to enter Perth or Brisbane? Yes, the buying window for both Perth and Brisbane, I think it's over, but that doesn't mean that you won't get growth there. If you buy something there, you'd still get about 20% growth coming through over the next couple of years, which would equate to about 100,000, 120,000 in equity. But you have to remember that you have to go close to 650,000 or slightly above in these markets now to get a good property. So alternatively, you could also buy properties in other parts of the country at lower price points with better rental yields, which would give you the same amount or even better growth. So it really comes down to your preference. Okay, the next one and the last question is, with mining industry in a downward spiral, I doubt Regional Queensland will follow the same trend as NSW in the last 2 decades. So this question was coming in the video I made about Regional Queensland booming. So to answer this question, in previous videos I've highlighted how the areas I'm talking about are not reliant on mining anymore. So I'm talking of regions like Townsville, Rockhampton, Gladstone and Mackay. Townsville, for example, ever since that Townsville city deal was announced in 2016, the economy has diversified. There are several industries in that Townsville economy and it's now changing and becoming a totally different city that's less reliant on mining. There's heavy spending on defense to upgrade transport infrastructure. The university is getting an upgrade. The hospital is getting an upgrade. There's billions being spent on defense projects. There's billions being spent on energy projects. So there is evidence to show that the economy is now diversifying. Gladstone, you can see, is now investing heavily into renewable energy sources. Same with Rockhampton. There's heavy spending on renewable energy, they're spending on commercial developments in that region. And then if you look at Mackay, that's more of a lifestyle location as well. People are moving into Mackay because of what it has to offer. On top of that, it really has some really good jobs as well. Housing is relatively affordable. So people actually want to live and work in these markets. It's not like these areas are people want to come here, just work and then move out immediately. They want to live, they want to settle here, they want to live with their families here. So I don't think that these markets are mining related. Of course, there are other areas like Moranbah, Charters Towers, Mount Isa, for example, which are mining towns and which are heavily reliant on mining. So I would definitely avoid places like that. But the markets that I just spoke about, they are very strong and they have a good future ahead. Okay, so that's it from me, guys. I hope you found some value in this video. Please like and subscribe to this channel, and I'll see you in my next video.